Good morning. My name is Scott Redler, Chief Strategic Officer at T2Live.com. Welcome to today's morning call. It is Thursday and there is a lot going on. First of all, overseas, in Asia, kind of mixed. The Shanghai was down another 2.7% at lower lows. But the last two sessions of weakness, we've kind of dislocated from that. The Nikkei is up a little bit. Actually, no, it's actually down a little bit. And the HK is not a standout. So still a lot of weakness in Asia, but that's not really the main headlines the last day or so. Yesterday, the main headline was the Fed and how would it act, and it came out very dovish. And the market that was somewhat strong pushed through the level that we've been isolating for a while and basically failed. So the question is, would there be downside follow-through to yesterday's push-through failure or not? And I'll get into that right after. So first things first, let's just get into the chart of the S&P and show you what I'm talking about. So basically, we've been talking about this wedge type pattern here in the S&P, and was wondering which way would it resolve after a big move lower. To start the year. Look at this wedge below all the moving averages. We put in another wedge. Some would call this a basic bear flag. So you have two cross currents going on. One, you have the Wednesday reversal that sometimes relieves pressure and gives you a nice rally. The question is, was this it? So yesterday, we had a bit of a move above that resistance, early on before the Fed, and then basically we pushed above this 1906, went as high as 1916, and reversed. I think a lot of guys who were trying to be long said, uh-oh, not the case, let's get short, including me, and probably went out a little short overnight, also like me. So right now you have 1872 as the low. So last night, everyone at this point knows that Facebook basically blew out the report on every metrics, from revenue to earnings to mobile to MAUs. Just there was no way to poke holes in it, which is kind of funny. Well, not funny. It's kind of cute because you had Apple and Netflix that were pretty much thrown under the curb. Netflix was pretty solid, was up a lot, and then was sold down pretty hard before the open the following day. So maybe people thought the same thing would happen with Facebook, and they got blown out of the water, either shorting it after the earnings yesterday or shorting into it, and now all of a sudden Facebook is near all-time highs. If you look here at Facebook, you will see that first level that it blew through last night was this 99.50, which was where it was basically right before when I came into the recap. By the time I got out of the recap, people were telling me that it was at 105, and now it's basically into this 107 area, and that's pretty darn impressive. So the all-time high here is right around 102. So this was your first spot that guys who said, you know what, they're going to sell it like they sell everything else, got blown out after hours. And then this was your gap fill, which was also impressive, and now you're up here. So if you're not in Facebook, which I'm not in Facebook, I would let it breathe. If you just think you have to short it, then you should really wait at least for a 15 to 30 minute high to short against. So let it maybe put a high in at 109, trade down to 108, and then short versus 109, and say, I'll give it $1. If it breaks 109, you get out of the way. Or if they sell it real quickly from wherever it is, and like 107.5 down to 104 in the first 30 minutes, comes off 104, and you think that this report will be strong enough to take out all-time highs at some other point, that it's going to trade in its own merits, you buy versus that low, and you wait for it to to trade, and if it doesn't break that, you stay with it, or just give it the entire day to see how much of the gap it holds, and then we'll come up with a strategy thereafter at Friday or Monday. So lots of different ways, but if you just guess off the open, you could get continue to get squeezed out the kazoots, or if you start buying too early, it's up a heck of a lot, and it could hurt you. So I would watch it. And I think other keys to today's market will be like Amazon and Google. If Facebook could do this on a really solid report, you better believe the shorts in Amazon and Google are probably a little worried, because if all of a sudden Amazon kills it after the close and announces a stock split, maybe Amazon can go back to the highs, because before Facebook's report, I don't think anyone was thinking that no matter how good anything is, you could have that type of move. So we'll see what happens today with Amazon pre-earnings. Right now it's up, I think, 3.5%. So first resistance is right here. So I would see, how does Amazon handle 608? If it gets here, hangs out here, doesn't pull back and the market's weak, it could probably go again. And then the bigger resistance comes in a little bit closer to where it broke down from, around 644. I doubt that it's going to really get much above this, prior to earnings. And if it does beforehand, I guess that's next. Then you also have Google, which is on Monday of next week. It too is up, and I don't think that there is a possibility of a split with this stock like like in Amazon maybe. But this was prior resistance, so we'll see if it gets here and how it acts. Some guys who are looking to just short anything, or went out short thinking Facebook would be bad, they'll have to make a decision on whether or not they want to cover into this or short more and see if that acts as resistance. And then you have the gap fill here, and then you have all-time highs. But I don't think we're going to see that or that until we get closer to earnings. For today, I feel like that'll be the pivot. So first 30 minutes will be interesting to see if the strength holds in the Amazon and the Googles, and what happens with Facebook if the high of the day is the first 15, 30 minutes or not. You also, in sympathy, you have Netflix and Apple up a little bit, so sellers will probably come back there first because Netflix already reported, so it's not like they can come out and change anything, so the shorts are still pretty confident there. If you are looking at Netflix, I would say, if you're just looking to short the open, it's only up about $1.50 now. I would wait. This is where it failed, different than Facebook. I remember I was talking in the recap, said if it could get above this and stay above this, chances are maybe they could buy something and sell it higher. If it fails, get out of the way, and boy did it fail. So at this point, I would say resistance 1 is really 94 to 96. So if it's up $1.50, I wouldn't be in such a rush to short it, considering it was just at 110 about a week or so ago, and the 8-day moving average, which has been resistance this entire time with the 200 days, closer to 98. So take a little care there. Apple was really weak yesterday, and it's only up like 60 cents this morning because it really doesn't trade with Facebook or those guys anymore. Here is your earnings gap. The longer it stays below this, if it could stay below this earnings gap for a session or so, I do think that people will be pressing their shorts here below yesterday's low of 93.34, and then your only point of reference is the flash crash lows. It might take a day or so don't press right now, considering look how much it's come down since breaking this trend line here and losing the 200-day at 117. But the longer it stays below this gap, the higher the probability this gets taken out, and then you're going to see probably the measured move at some particular point of this apple, where you had the left shoulder, the head, your right shoulder, break number 1, and then the actual pattern broke right around here, and your measured move from this to this really takes you down to, some say below the 80s, but I would say somewhere around here. So just don't blindly be buying Apple because of the move that it's had already and because Facebook is up. Their buyback will start again now that earnings is over, so it might be a little harder to go down. And but ultimately, there's not really much of positivity around this. And this spot should at least be tested, let alone if it breaks below that. So take it easy on Apple. And I think most of our community has been either away or trying to be shorted and not just holding their nose, because I used to like trading it a year or two ago from the long side when it was above the 8 and 21 day and breaking out. Remember when they announced a 7-1 for stock split? I was like, iPhone to head, I think it breaks above 100 to a 70. Well, it had a great trend then. The last year or so, it's consolidated and broke, and it's been technically weaker. So anyway, stocks change, everything goes in cycles, so you have to change accordingly. So to sum up high beta, it'll be interesting once again to see if Facebook holds up and actually trades higher after the first half an hour, and if Amazon and Google hold the opening strength or it gets sold. And you can keep your eyes on Netflix and Netflix and Apple. As far as oil obviously has been a main headline. Yesterday we were kind of weaker with oil more positive, so that was something different. Now oil's up again on the Russia-Saudi talk, so we'll see if that holds up or not. The USO, if you want to take a quick look, remember the last time we had an igniting move in oil, it was a much faster and even much more potent. So, and that was all the way back here when it took back the 8 and the 21 day, and then it did a whole lot of nothing for a few months before breaking lower again. So now, you know, you've had another move off these lows, and now the question is, you know, can it retake the 21 day again for a bit of a move higher? It hasn't been above the 21 day in a long time. So with it opening up a little bit, I would say see if it could stay above yesterday's highs here of 843 or not. I wouldn't be just going out and buying oil here just to buy it, you know, but watch it for sentiment. XLE, you know, has that wedge type pattern like most other sectors out there that had kind of failed. So, you know, see what happens here today if the market tries to hold bid and oil holds up. Maybe this finally takes back the 21 day, which it's been below ever since breaking this wedge right here. But again, still very weak below the 200 day in a downtrend, so take some care. And you know, bigger resistance comes in where the last threshold support was. Old support turns into resistance, so we'll see. I actually went out short the spiders yesterday, and this morning when I was in the virtual trade floor talking, which is our one of our premium products, I was sitting there. It was like 7:15. I was getting done writing my note. I'm like, you know what? I'm covering some spiders here at 188. In the morning when I was on my way in at 6 o'clock, this, you know, S&P futures were up 15. They went red. I'm like, I'm just gonna salvage some of that trade. That's what I like to do, salvage, and then figure out what's next. So, you know, as far as the spiders are concerned, you know, you did have this wedge here, okay, and it kind of pushed through and failed. But the day after Fed Day, sometimes they like to shake things up and do the opposite. So anyway, at this point, I don't think you get too bearish unless you get a break and close below 187.06. And if we happen to get back above 190 and hold, and you see high beta holding up and oil holding up and the banks green with Deutsche Bank being bad, maybe it tries again. So just don't have short on the brain. But for me, going, you know, yesterday, getting short when we failed here was something different, which was good. And then going out short was something against my comfort level. And, you know, so down here, flattish, I was fine with. So I just took it off, and now I'm going to wait. So I'm only short a tiny bit versus in the way. But still, you know, you do have the pivot low here. You have a higher low here, and it's trying to hang in there. So the question is, you know, can it go higher before lower? That's what a lot of people are thinking, or just lower. So we'll see. You have the end of the month too. You have the next 2 days, you know, the end of January. Do they want to kill things and make the monthly statements look horrendous and scare the, you know what, out of all the investors out there? Do they want to keep things around here, or maybe even rally them a little bit to ease some of the pain on the psychology? So, you know, stay tuned. As far as the banks did have a little bit of a better move the past 2 days. You know, I focused on JP Morgan and went out long, what was it, Monday, or was it Tuesday? No, Tuesday, and then yesterday they were all red and went green, so they gave you that day-and-a-half trade. Thank goodness they didn't just trap you, and at the end of the day they kind of reversed. So I guess see if there's any more to that. This looks just like everything else, where you had this lower pivot, broke above, and kind of failed. You know, for the banks to be any good, you would think that this, you know, JP Morgan would hold this 56 to then build and continue. If it gets below this, I think it's the same old banks, and it's still in a horrendous trend. You still have this big gap down to start the year, which dictates direction, and now it's just trying to hold the 8 day. So, you know, keep an eye on that with Goldman. This morning, BABA came out with pretty good earnings. You know, I'm not an analyst, but at first glance, it looked like it beat on most metrics. It was up like 3%. I don't, you know, it's not having a Facebook type move, but, you know, remember how good it looked here, up at 85 before failing, and now it's been hanging in this lower area. So I would say, see how it acts into this. Just don't blindly buy it, but if it could hold right around the 73 and not come in and the market looks a little weak or it diverges, maybe there's an extra push. So, or maybe even help sentiment that, you know, Bob is doing okay with all the doom and gloom that's being spoken about in the Chinese markets. So 73-ish is a level, and then 76-ish. So if it comes up here, stays up here, and holds the majority of the opening gap, maybe there's another push to close that gap up to 76. So we'll kind of watch that for a trade. Also watch Sperling, because he tends to trade BABA a lot, and he's a little bit better at it than most guys. And the metals made a new January high yesterday. They're off a little bit. That's been someplace to hide during this market volatility, just trending up. And at this point, you know, it's been, you know, reclaimed a lot of moving averages. It did most of that right here. Remember the last time we talked about this little wedge? Well, we talked about metals a few times changing character. One was right in here, okay, before this little down move, and then it had a nice rally. Then it got tight again right around here. On the VTF, guys started to get long for another move, thinking it could take out 105, take out the recent January highs and go, and that's what it did. But still lacking power. You know, the 200 days right there, we'll see if it kisses it. It's off a little bit today. I would think for the metals to stay constructive, you know, 106 and change needs to hold, 106 and a quarter. And that would keep it above the 8-day moving average and the 21-day, which has been a better trend for something that it hasn't been for a while. And in closing, you know, I think, you know, the cross currents and the divergences that we've seen yesterday are kind of showing up again this morning. You know, some dislocations started to happen now, and this morning it might continue. My focus will be watching to see what happens with Facebook. You know, does it put its high in the first 15 minutes and then start grinding lower the rest of the day, which would then probably take the, you know, the air out or the enthusiasm out, or at least the pressure off the shorts and the Googles and the Amazons. You know, can Apple continue down after being down 6.5% yesterday? Will Netflix just be sold, or can it push higher? I watch BABA also, and then again see if oil holds up the third day or fails, and if the banks that are green a little bit this morning, even with Deutsche Bank getting hit, you know, continue. And then again, the range that has been put in place in all these sectors. You know, a lot of guys, you know, were trying to play a bounce in the IBBs like me, and it failed. So you get away from it. That happened right there. So if you tried it here and it failed, you get out. Some guys might have even shorted this as a red dog reversal, and now you'll see if IBBs will be one of the first few sectors to make new lows of 2016, because right now it doesn't look that healthy. So watch the spot, see if it holds up and gets you an inside day here or gets some downside pressure. Also, lastly, I didn't show the IWM, so I might as well do it. It too, very tight lower range. I know I've tried to play it for a little bit more of a bounce, but hasn't happened. If it were to break and close below this little spot here of 99-ish or 98.85, I think guys like me who have been thinking maybe it goes a little bit up, you know, winds up just kicking it out, and this then turns into, you know, a bear flag continuation pattern versus a lower pivot that resolves up for bigger resistance. So that's what I think most traders are trying to do, figure out, will this pause down here lead to a bit more of a relief rally with last Wednesday's reversals, or was this a pause to get the oscillator from minus 100 to almost zero to then continue the downside action as overseas and around the world has been that week? And we'll continue to try and figure that out every day while making a living. Hopefully you're doing that as well. Have a great day. I'll see you at the recap.